Hello traders, and welcome to another trading analysis video brought to you by Orbex.com. You are now surfing the waves with Richard. So I wanted to do a video on the GBP Swiss franc and the recent post which is actually present, a fresh post done on the Orbex blog. So what I wanted to do is to follow up on that post with a trading video right here. I'm on the pound Swiss on the daily chart, but first of all, I would like to share with you my, let's say, have a bird's eye view and brief you guys up, get you updated on what's happening and what's been happening. So, let's say, for instance, in 2015 January, this is the SNB surprise, right? So the way I'm labeling this is as the C leg within this primary B, and then the final C leg in an ending diagonal, thus completing this cycle wave W. So following up on that, yeah, pound started suffering, let's say, with Brexit and then flash crash. So we had a wave W and then X and then A, B, C. A represents the Brexit fall, and C basically C represents the flash crash. Okay, so right after that, pound Swiss started reversing on the upside. The only thing that I would like to point out is that this pretty much looks like a corrective structure, and some would call it as a bear flag. Okay, so this is indeed a weekly chart. So what I'm gonna do is I'm gonna zoom in. I'm gonna examine this piece with you. Okay, switch to the daily chart, and the way I'm labeling this is as a W X Y in basically minor scales. This purple W X Y, and thus completing an intermediate orange W. Okay, and then three waves down in minor scales, thus completing wave X intermediate. So all this is basically a represents a running flat, the way I'm labeling these things. Okay, so let me just put this like this. All right, now right after that, so we have basically W and X until now. Right after that, we started reversing on the upside. The way this unfolded is in a leading diagonal, which I've labeled as an A wave, in a obviously a leading diagonal. So there's been multiple attempts for me to, for me to have this bearish views on the pound Swiss. Let's say, for instance, one of them is this post when I was looking obviously for the downside and explaining things. Okay, we did go on the downside and started reversing on the upside. And another attempt was this when I thought that, due to the bearish divergence, this could actually start the bearish sequence. The way it actually started is in a corrective pattern, so it was still correcting. Hence the reason why this bearish outcome was temporarily abandoned from my side. But now I'm back, basically with a more like a clearer view, let's say, because this is pretty much looking impulsive. Okay, this would represent the C wave for the completion of intermediate Y, thus completing this entire pattern, yeah, for primary X purple. So we would have WXY completing this entire piece right here, and then of course I would be looking, of course, for um, wave Y, purple, thus completing wave X. Okay, so what I want to, what I would like to point out right here is basically, let's say for instance, Fibonacci extensions. Yeah, let's say for instance, how would I know when this wave Y would complete? Well, firstly, I would be measuring wave W with X for me to have 100% Fibonacci extensions for this wave Y. Right after that, I would label A, B to determine the end of C. So we can actually see that 61.8 is right there. I mean, this is the projection for minor C. Also 100% projection for minor, sorry, for intermediate Y, and we actually, all of this is actually aligning with the 50% 50% retracement of that entire drop right there. So pretty much the Fibonacci ratios are aligning, yeah. So this would mean that this is indeed a point of interest. So in other words, vibration level. Price action would be expected to vibrate. Now, another another thing that I would be looking for, let's say for instance, for me to be able to have a like a extra confirmation would be this, yeah, the bearish divergence. We can actually see that the volumes are quite, I mean, decreasing while a new high is being created. Typical divergence sequence. Basically what's happening here, technically speaking, in my personal opinion, is that the bulls are pushing the market higher while the volumes are decreasing, which is indicating a possible bearish divergence at the end of the at the possible end of wave C. So what I'm gonna do is I'm gonna go on this piece right here. So all we need to do according to this wave count would be to count 5 waves right here in this piece. So we can actually have that bearish divergence, yeah. So this is basically the start. We have 5 waves in one, then retracement, 2 sharp retracement right here. So we would expect a complex correction in wave 4 according to the law of alternation, which is actually happening right here. Okay. Um, so wave 3 was extended, which would imply wave 5 to have basically to unfold in the same amount of time and length as wave 1 according to the uh, Elliott wave principle. Yeah, according to the Elliott wave guidelines. So we have 1, 2, 3, and then 4. What I would actually need for this setup is a bullish move. Okay, so let's say for instance from 3 and 4 we would obviously be looking either at 61.8 100%, or if it's extended 161.8% Fibonacci extensions of 3 and 4. Now obviously that will most likely come up when this divergence would actually occur. So the post has been done. The levels in focus are basically this ones. Okay, let's say for instance either aggressive or let's say for instance 1.353, um, let's say moderate 1.36, and conservative would be exactly where these fibs are actually aligning, 1.365. Yeah, so let's say for instance another Fibonacci extension which is actually aligning is this 61.8, which is aligning with this other one, yeah, with a minor C blue. So from A to B we have 61.8 for the C, but also within the C we have from 3 to 4 this Fibonacci 61.8. So everything is kind of aligning right there. I'm quite curious to see what would happen if and only if pound Swiss would give another bull run. So we can actually see, as as these volumes are actually pointing out, volumes are indeed decreasing right here. This would be the secondary confirmation for possible bearish divergence. So I'm just going to sit tight, wait for it, and see basically what happens. But I wanted to share with you guys this view, and also follow up on the with a clearer make some clearer points on the actual post. If you think that it would be quite complicated for you to understand, or if you need if you feel the need to learn, I recently developed a full explanation on an Elliott wave video course, which is available on the Orbex website. Also doing frequently posting some articles on technical analysis, such as this one. Okay, okay, of course, recently I know I started doing videos, trading videos such as this one, but also you might be obviously interested in the webinars, upcoming webinars. Some of them are educational, um, some of them contain advanced technical analysis, straight to the point, but also some of them are contain live trading, such as the one on NFP next month, yeah, which is actually scheduled. So anyway, I'm gonna leave you guys to it, okay? As I like to say to all my traders, Until next time, stay in the green and many pips ahead.